Silver now has demonstrated it's now first breaking out, and would not surprise me that while they both go up over time, that silver from here to say the end of the year actually has more of a percentage gain than gold. But gold and silver, other than correction phases, still have a long way to go. This bull market hasn't even become matured yet.
While gold has been grabbing attention with its record-breaking performance, silver has been consolidating just below key resistance levels. The $32.96 mark acts as both a barrier and a potential launch point for silver. A breakout above this level could spark a rapid upward move, potentially following in gold's recent footsteps. 2024 has been an interesting year for silver. After a slow start, the precious metal has emerged as the best-performing asset in the sector, with prices up nearly 34% so far this year. Peter Grandich discusses the current state of the gold and silver markets, emphasizing their potential for significant growth amid global economic uncertainties. He highlights the increasing influence of the BRICS nations on precious metals and the shifting dynamics of global currency systems, particularly the weakening role of the US dollar. Grandich also points out that silver, often overshadowed by gold in the past, is now showing clear signs of breaking out and may present greater growth opportunities moving forward. Gold has made higher lows and higher highs throughout this century, and the bull market remains firmly intact as of October, with the price hovering near the $2,700 level. Since the November 2022 bottom, gold prices have consistently made higher lows and higher highs with minimal downside corrections. Looking ahead to 2024, Peter Grandich expects gold to outperform both stocks and bonds, particularly questioning the appeal of bonds in the current environment. He highlights that gold has already outperformed stocks this year, just as he predicted. Despite criticism from Bitcoin advocates, Grandich stands by gold, pointing out that central banks are buying gold, not Bitcoin, and emphasizing its proven value over thousands of years. In his view, sticking with gold was the right move. Stick around for the full video, and if you find it helpful, make sure to like and subscribe. We're excited to see more of you joining our community, with only 20% subscribed so far. Help us hit that 1,000 milestone.
I think a lot of the movement was based on what was transpiring with the BRICS. Now we go into those meetings next week. We've already seen a lot of news come out. It's all bullish for those of us who've been big believers in the BRICS. I've been one of them. I think I'd be hard to believe there was somebody much more of a believer than I. And there tends to be sometime buy the rumor, sell the news. So there's always that possibility. And what I would just tell people, and nobody knows the future but Almighty God, is we know we'll be in a bull market if it's a sharp sell-off. And everybody goes, how's that? Bull markets always have sharp sell-off corrections. It's when things just trickle and goes down and goes back a little. You think it's turning, it goes down again. That's a bear market. And that the goal isn't anything near that. So it wouldn't surprise me. It wouldn't change my long-term thoughts. But it's hard to talk about resistance because we're at levels we've never been before. The only resistance I think somebody would talk about is a psychological number, which would be 3,000. The thing to talk about, which is something that Pete Grandich has not spent decades talking about, and the silver bugs used to get mad because I always felt it was like kissing your sister compared to owning gold, is that silver now has demonstrated it's now first breaking out, and would not surprise me that while they both go up over time, that silver from here to say the end of the year actually has more of a percentage gain than gold. I think one of the big stories that's come out in that, besides the tremendous short position, and there is that we're learning more and more two key things for silver. One, the surprising industrial use militarily wise. That's not something that's been discussed till recently, until we start to realize how much silver is being used in military weapons and things. But then also that China has now been going around the world buying silver directly from miners. And these all just bode well. So other than healthy, normal consolidation and correction, both of them's least resistance is higher, not lower. I think gold's going to outperform both stocks and bonds. And they're like, especially bonds. How could you tell me, And I just feel through 2024 was my line that gold would outperform both of them. And it has. And what's interesting, when this year began again, I said, for the year on its own, gold will outperform stocks. And what's really amazing is, I get these weird emails. I guess some people don't have much else to do in life. Elijah, God bless him. And, how could you tell people to put everything in gold and all? And yet they all rave about Bitcoin. And they rave about a person that tells them not even to spread the money among different cryptocurrencies, just put it all in Bitcoin. So all over the media, there's people telling you Bitcoin's going to the moon, Bitcoin's going to a million, put it all in Bitcoin, Bitcoin. And yet I use something that worked for a couple thousand years. Central banks are buying it like there's no tomorrow. They're not buying Bitcoin, they're buying gold. And yet I'm the crazy one. So it's okay. At the end of the day, it was the right move.
Markets are closely monitoring geopolitical tensions in the Middle East, as Israel considers its next move against Iran following a Hezbollah drone explosion near Prime Minister Benjamin Netanyahu's private residence on Saturday. Meanwhile, U.S. President Joe Biden and his administration are pushing for a renewal of ceasefire talks in the region, despite resistance from Israeli hardliners who oppose making concessions. At the same time, traders are adjusting their portfolios ahead of the upcoming U.S. election on November 5th, with polls indicating a potentially tight race between Donald Trump and Kamala Harris. In periods of geopolitical and economic uncertainty, investors often turn to gold as a safe haven asset. Peter Grandich believes that if Trump wins the election, the political divide will likely deepen. Drawing from his 41 years of experience in the financial sector, he observes that today's social, economic, and political challenges are significantly more severe than those that triggered the 1987 stock market crash. Despite this, he notes that investors remain unprepared for potential negative outcomes. Now, let's redirect our attention to a video.
If you think, let's just say Trump wins, we'll just on assumption Trump wins. We already know what seems like half the country was willing to do in order not to have him, and what was resorted to. Do you think just because he wins the election, they go, okay, we lost, let's walk away? No, I just think they become 100 times worse if that's possible. Let's say for some reason he doesn't win, or he doesn't win because there's highly questionable stuff. If you think we had issues before, there's going to be. So the only delay I see is I do see if he wins, there'll be a short honeymoon period, probably until he's sworn in and goes in a few months, that some people will feel breathe out because it's not as severe as it could have been. But then the reality, everything around it. But I'll tell you the biggest issue that I find, I'm in my 41st year. Given all the issues that you and I only touched on that we can spend hours talking about, that are legitimate social, economic, and political issues, I've never seen investors and the investing professionals as complacent anywhere near as they are today. And for me, this is a kind of an important day because tomorrow, going back 37 years, where the Wall Street Whiz Kid was born. I was a young kid in the business less than 3 years. I was head of investment strategy for a New York Stock Exchange member firm. I said there was going to be a crash. The crash came. The day after the crash, I said we're going to go back to new highs within 2 years, and we did. And when I think of the problems we have now versus what we had at that point, it's not even remotely close. So I think the real concern is the complacency and the assumptions that people are making and are not prepared for anything on the negative side. And that's where I think, again, has aided gold, because the small group that recognizes that and realizes how critical that's going to become and how more useful it's going to be, they've been the buyers of it. And I believe the central banks should recognize that. Listen, this bull market didn't happen because me and you and others like you got people to buy gold. This happened because central banks have decided that there's going to be coming a major monetary change in the world, and gold is going to be as important, if not even more important, than bonds. And they've been repatriating wherever they had their gold and also buying it in huge quantities. And the price has not stopped them from doing that. We have not seen a fall off because of price. And now we see also that they're looking at silver, especially the key countries. So the gold and silver market, outside of corrections and consolidations, the least resistance is up, not down.
Both silver and gold are gaining from the current risk-off sentiment in the market. Commonwealth Bank of Australia analyst Vivek Dhar projected in a note on Monday that gold futures could reach an average of $3,000 per ounce by the fourth quarter of 2025. Meanwhile, silver surged upward during Friday's trading session, fueled by ongoing bullish momentum across the market. Are you currently investing in gold or silver? What challenges do you foresee for the gold and silver markets in the near future? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.